Normally, we would not talk about a deal like this, but this is important given all the supply chain and semiconductor challenges right now. What does a significant regulatory challenge mean?
Well, it means that this transaction, which everyone thought from the beginning was going to be very hard to pull off, was basically impossible. You had basically the EU, the UK, the US, any major regulator you can imagine in the world expressing serious doubts whether this deal should go forward. And the fundamental point was that Nvidia was essentially picking up a part of the supply chain of its own supply chain, which would give it incredible amounts of power over its customers and the customers of ARM, with whom Nvidia competes. And so this created a sort of existential threat from the outset of the deal that Nvidia would essentially be supplying these chip designs to its own competitors, and whether they would be cut off from that access if it held ARM. Obviously, also, it comes in the backdrop of just an incredible boom in Nvidia's share price over the course of the pandemic. And as we come out of the pandemic, it's actually let off a bit. But Nvidia is really a company that's just jumped to the front of minds of sort of power and technology, leapfrogged Intel in the US and in the stock market. So this was a sort of flexing of strength by its CEO, Jensen Huang, and it's all come undone. And many people would have said this was very much clear from the outset that this would be the outcome.
And it's not just here in the United States. The UK deals regulator has cast doubt on this as well. It's interesting, to your point, Arash, that these companies would push forward like this when, to the point you just made, any lawyer worth his or her salt should have probably advised them this deal was doomed from the start.
From SoftBank's perspective, perhaps it was a risk worth taking, right? They had owned ARM since 2016 when they first struck the deal to buy it. And they have really not succeeded in advancing that company. They made a bunch of commitments to the UK, which they held about growing the workforce and sort of keeping a lot of the identity of ARM. When they bought it, it was at the time of Brexit, and the UK had completely had an identity crisis and was like, okay, we'll just pawn off one of our most valuable assets to a foreign buyer because it'll show that the world still has confidence in the UK. But what SoftBank discovered along the way is that it's not good at operating businesses, and this fits with a broader narrative around SoftBank, around selling down its controlling stakes in companies. You'll think about Sprint and how they merged it with T-Mobile. So this has fit into Masa-san's desire to get away from operating businesses and just owning stakes in businesses. So from his perspective, Jensen comes along and gives him a cash and stock deal where he has upside on Nvidia shares. And as you see, the deal was agreed at an initial value of $40 billion. At one point, it reached a value of $80 billion through the surge in Nvidia's shares. And now today we're reporting it as a $66 billion deal. That's because of the share component. So Masa was basically taking the optionality on Nvidia shares and thought that was a good thing to get. Now, they did also negotiate this break fee, which is why they're going to walk away with $1.25 billion for their efforts and for their troubles on the SoftBank side. So in a sense, their lawyers probably are quite happy with the outcome, although Masa-san would definitely probably prefer to be an Nvidia shareholder and this transaction happened. Now they have to go to plan B, as you said earlier.